Welcome, everyone. We are excited to have you here as part of our PathLock Innovation Series. Our session right now is Risk Quantification Unveiled, Enhancing Transaction Monitoring for Safer Operations. My name is Stephanie Anderson. I'm the Global Webinar Manager here at PathLock. Our presenters today are Kyle Benson, Senior Director of Product Marketing at PathLock, and Susan Stapleton, VP of Customer Advisory at PathLock, and they'll introduce themselves in just a moment.
Okay, thank you, Stephanie, and good afternoon, and thank you everybody for joining. I'm pleased to be joined by Susan Stapleton. She's our VP of Customer Advisory as our subject matter expert today. So Susan works with our customers daily to kind of help define the right solutions for their unique needs, and with experience in over 160 customer implementations, as well as experience working for SAP. Susan has a wealth of information in ERP solutions, cybersecurity, and controls management, some of which we're going to be covering today. And I'm Kyle Benson. I'm a Senior Director of Product Marketing here at PathLock, where my role is to work closely with our product management team to ensure that the products that we bring to market are providing the value of solving real world problems and use cases that you run into on a daily basis. So with that, let's get started. All right, so obviously, yeah, there we go. All right.
Okay.
There, we're good. We're good to go. So obviously, you're aware of the impact that business controls have in creating and maintaining a cybersecurity program. And we know that this is an incredibly challenging area to both monitor and be able to manage at scale. I mean, just seeing that over 75% of controls are still tested manually, and that almost half of the companies in one recent survey that we had reported material weaknesses, shows that something needed to be done, right, to make controls management more manageable, particularly with the latest SEC mandate for public companies requiring disclosure of material breaches within 4 days. So with audit costs skyrocketing and cybersecurity resources still as scarce as they are, we know that organizations need help. And that's why our team of certified auditors have worked with our product teams to bring to market a comprehensive platform that can automate and monitor controls continuously and help you reduce risk by up to 80%. So it's our thought that being able to identify and quantify risks goes far beyond what legacy IAM vendors can provide. And since this is the innovation series, we'd like to show you how PathLock is innovating to be able to provide that end-to-end visibility and controls of your risks. So we can move ahead. So in this session, we're going to talk about the current threat landscape as we see it. We'll explain transaction monitoring and the impact that risk quantification has on a cybersecurity program. And then I'm going to turn it over to Susan to discuss how to develop a transaction monitoring and a risk quantification program, because this is the real innovation that separates a traditional static cybersecurity program from a really dynamic and continuous monitoring environment. Now, it probably goes without saying that, cyber threats that we're facing today are more sophisticated and diverse than ever before. You've heard that in every session you've been in cybersecurity in the last 5 years. I get it. But ransomware attacks have really spiked dramatically, right? They're crippling critical industries, and even some of the simple data breaches, are compromising a lot of sensitive information. So this year alone, over 1 billion email have been exposed, and figured out to roughly like 1 in 5 internet users. So the range of threats is continuing to grow. And that's why it's so important, of course, that you stay informed and you stay vigilant in watching the challenges. Unfortunately, as we look at it, some recent cyber attacks have made headlines, and they're becoming even larger in scale. Just recently, Okta, of course, disclosing their customers' data was breached. Well, what's kind of interesting here is, in this case, it was actually an unauthorized access to the customer support system that leveraged a service account by gathering credentials from an Okta employee that logged into the service account while being signed into their personal Google account in Chrome on their Okta managed laptop. So I bring that up only because it points out the need for a solution that not only manages your employees' identities, but also third parties and of course, service accounts as well. Another good example was Ardent Health Services. They were attacked just before Thanksgiving and began having to divert emergency patients over to other hospitals. And when you think of it in terms of the scope and scale of it, Ardent has 30 hospitals, 200 care sites, and they're all going through and being assessed now. Obviously, even if they aren't, totally devastated by it, it has a huge negative impact on their operations. And healthcare is a prime target. There have been 480 attacks on healthcare thus far in 2023. So another study in GovTech, it showed that 69% of state and local government survey respondents have been a victim of ransomware. So these guys go where the money is, right? And with malware kits, they're available on the dark web. Code is easily generated through artificial intelligence. It seems like the barriers to creating these cyber attacks are becoming lower, and the results are becoming more profitable for them. Now, if you sit through enough of these sessions, you'll hear a lot of numbers thrown out about the financial impact of a cyber attack. And the numbers usually vary widely. But I don't think I've ever seen one that didn't have an M for millions behind it, right? They're very, very expensive. And what often gets lost in the math behind cyber attacks is the fact that whether you pay a ransom or you have to replace equipment, or you have to go contract for specialized services, that money comes out of profit. So if you have a 20% profit margin, you need to drive an additional 5x the cost of the cyber attack in revenue just to break even. So it's kind of a big deal, right? The regulatory landscape had to do something to address this growing threat because everybody's pounding on the tables, and governments and industries around the world began enacting or enhancing cybersecurity regulations to ensure that there's at least a baseline level of protection. Compliance isn't just a legal obligation. It's now gotten to the level where it's a strategic imperative, but it's very difficult for organizations to be able to keep up in terms of the resources that they need, and having the resources from a technology standpoint, but also having the resources from a personnel standpoint to keep up as well. So Susan, we can go on to the next slide, please. So now we're just going to dive into the world of transaction monitoring, and I like to think of it as having your own cybersecurity detective. Just somebody that's meticulously examining every transaction, every user move, like in real time, spotting those anomalies or the suspicious patterns that might spell trouble for your system. Now, when it comes to PathLock, you can also think of it as a financial detective within your business applications, right? We analyze transaction data. We show the financial exposure of SOD conflicts. And what this means is that you get a detailed breakdown of the risks and impacts, viewable by the SOD control conflict. You could view it by user or by application. Ultimately, it ends up saving you up to 80% on your SOD audit time and the costs. But what does transaction monitoring, how does that matter for IT security teams? And since transactions, of course, are the lifeblood of any digital system, it's not just about monitoring. It's more about spotting anomalies, being able to quickly catch unusual activities that could signal security threats. And those threats don't always come from the outside. So fraud prevention is another area where transaction monitoring can be huge, playing a crucial role in preventing and mitigating fraud before it gets out of hand. And of course, there's compliance assurance, ensuring that the transactions align with those regulatory requirements so that you have a solid compliance framework. And guess what? It seamlessly integrates with identity and access management in terms of user behavior analysis. So if you're an IAM professional, you can get insights into user behavior and identifying any abnormal activities. And it's also access pattern recognition. This complements IAM by recognizing unusual access patterns, allowing you to have some quick intervention if that's what's really needed. So think about it like this. If you were a big e-commerce platform processing tons of transactions daily, transaction monitoring is kind of that superhero, right? It instantly spots irregularities like multiple high-value transactions on a single account. So quick detection in a case like that certainly will save the day. So with early threat detection, enhanced fraud prevention, and improved regulatory compliance, we can now start to connect the dots that make transaction monitoring part of your comprehensive cybersecurity strategy. Ultimately, you can then put a financial value on the transactions that have the greatest risk of impacting your business. And we'll go to the next slide. So risk quantification, it's more than just a buzzword. So it's a strategic approach to understanding and measuring what the potential impacts of risks are on your organization. In simple terms, it's about putting a number to the risk, right? A quantifiable measure that allows us to prioritize, to be able to allocate resources, and to be able to make informed decisions. The old traditional risk management, it usually involves identifying and mitigating risks, but risk quantification takes it a step further as it introduces that quantitative aspect, which gives you a lot clearer picture of the potential consequences. And as you get into it, it allows for a more nuanced and informed risk management strategy. You can actually click down, and really get to that fine-grained view that can help inform your decisions. Now, as you can see in this screenshot, you can have the ability to see the volume and the financial impact of exceptions to your rules by the rule ID, and you can see when that rule was last run. So why is this quantitative approach so crucial? There are a few key benefits. First, you have informed decision making. So by assigning numerical values to risks, decision makers can prioritize and address the most critical threats first, which then helps drive resource allocation. Like we said before, cybersecurity skills are in high demand and nobody, I think, has as much as they would like to have. But by being able to quantify this, it does allow for more effective allocation of your resources by focusing the efforts on the high impact areas. And that's particularly if the resources working on those high impact areas are very expensive consultants or service companies. And then in the area of communication and reporting, quantifying risks makes it easier to communicate risk scenarios to your stakeholders, whether they're executives, whether they're board members, or even if they're other team members. And at the end of the day, although some people may not understand the technical nuances of a risk, they'll certainly understand the financial risk. And it's kind of counterintuitive, but it isn't always the risk with the greatest number of exceptions that could have the greatest impact. Sometimes it's fewer but higher value exceptions that we need to concentrate on. And without continuous monitoring, these could potentially fly under the radar. So now if we bring it a little closer to home, the question is, how does risk quantification integrate with your identity and access management systems? So IAM at its core is just about managing user access and permissions. And when we quantify the risks associated with specific access levels or specific user activities, we really empower the IAM professionals to make more informed decisions about user privileges and user role design. It can certainly help you get to that point of assigning least privilege, right? It's also about aligning your IAM practices with the broader risk strategy of your organization. So I'm going to wrap up here. Implementing risk quantification requires a strategic approach, though, and it involves assessing the likelihood and the impact of the various risks, assigning values to those risks, and establishing thresholds for what your company may deem to be acceptable risk levels. Now, as I mentioned earlier, Susan has a wealth of knowledge about implementing transaction monitoring and risk quantification. So I'd like to pass it to her to show some real world examples and perhaps give you some suggestions on how to get started. Susan?
Thank you very much, Kyle. Welcome everybody. Yeah, I'm gonna focus on segregation of duties today, and I'm gonna focus on how to manage and monitor, quantify risk, monitor and manage SODs in complex business application environments. So, you know, one of the things about quantifying risk, the first step to that is identifying who does have risky access and making sure excessive and inappropriate access does not get into your system. I mean, that is the absolute best control you can have. But a lot of customers are adopting cloud solutions to manage their business process, and there could be 2 or more applications in your business process. Some of the challenges that I think the majority of us have realized how to get past is making sure that we know apples to apples what authorization concepts look like between SAP and Oracle, SAP and Coupa, any of the applications that need to be managed from a financially relevant perspective. Manual checks will be error prone. So any way you can automate the identification of risk, the better off you're going to be. User IDs may be different. There are ways to map those user IDs, whether you're using access control or the PathLock solution. And there's still the challenge of IT organizational silos. This is something that if it is still in your environment that you have an SAP group that manages IT and security for SAP, and other groups that manage security and maybe even compliance for other applications, that has to change because your users cross these systems. And if you are the owner of a GRC solution, it's really in your best interest to bring these applications into GRC so that you can look at these users that have access across the business applications and identify those users. So that's the first step. You really need a good process in place to identify the users. PathLock Cloud allows you to connect to multiple business systems. It allows you to identify compliance frameworks and types of risks within those applications. It will go across systems. It will monitor. You know, this has a pretty wide array of applications, but a lot of our companies we work with, they have acquired other companies running completely different ERPs. And we have the ability in one GRC solution to bring all of that in, have our risk fully defined, no matter what the underlying business applications are, and then the ability to understand our users with risky access and get a good picture of that. And just as importantly, look across systems when maybe our procurement to pay process crosses both SAP and Ariba. We need to look at user access across those systems to identify that. A lot of people on this call probably also have SAP Access Control. SAP Access Control can be extended real time to any other business application so that you have one rule set. You can run your risk analysis here. And at the end of when you've identified users with risky access and remediated what you can, you will have this group of users that have segregation of duties. And this could be across multiple business applications. So once we identify our risk, then we need to figure out how to mitigate our risk. And again, we may be doing our procurement activities in Coupa. We're creating our purchase orders there. We're approving our purchase orders there, making our payments out of SAP. That is a segregation of duty that every auditor will be looking for and making sure that you're managing against. We still have challenges with mitigation. Data structures within these applications are not the same. So if I want to know who created a purchase order and paid a vendor, I need to know where that purchase order data is from Coupa, and maybe I'm still purchasing an SAP. Really need to understand where I'm doing the activities and how to go get that data so I can start mitigating and quantifying my risk. Don't want to do this manually. Again, there's so many challenges with looking across different business applications that it is just bound to be error prone, and you're going to miss things when you try to do this on a manual basis. User IDs still will be different. This is the difference when you get to mitigation. When you get to mitigating risk, you will have a process owner, a business owner that understands the process from end to end and owns the process from end to end. So this is how you can start breaking out of that silo, is that your compliance, internal controls, and business folks will understand the importance of looking across this entire process, no matter who owns the application from a security perspective. So this is going to start helping you get out of that siloed approach to security when you start looking at how to mitigate and quantify risk within business processes. One of the things that I focus on, because I've been doing this for a long time and I came out of the business, is how can I help my business own the control process, whether it's segregation of duties, business processes, or even some ITGCs. It's helpful for the business to own what's happening and monitoring what's happening in their business applications. But the business is not there to manage compliance. The business is there to run their business process effectively and efficiently with sometimes dwindling numbers of resources. So when we want the business to start helping us manage or monitor controls, we need to make it as simplistic as possible, because the manual control process requires so many resources to create the queries, test the queries, run the queries, and test them period over period over period. So it's not a one and done. They will be doing this, collecting data from multiple systems, looking at users, and as the business process starts expanding out to other applications, this is going to be at least double, if not triple, the time required of the business to perform their controls, because it's going to go through so many systems. And if this is all offline and download to spreadsheets and pivot tables and all of that, I'm sure that there will continue to be missed events. And you have to deal with user mapping, who gets the data reports, do the business run all of these queries themselves? Is someone in security or IT running controls or reports and sending out data? This is a very convoluted process in most companies, and it is error prone to say the least. But then it's very hard to prove to audit that you have a complete effective cycle here. A lot of emails and back and forth and a lot of frustration, frankly. Someone called out the other day, this guy pounding his head on the desk is absolutely the right picture when it comes to managing segregation of duty access. But I do want to say, the same process could be over process controls, monitoring vendor invoices, master data, and so on. So you want to try to move from this manual process to automation wherever it's possible to do so. Because when you move to automation, you are letting the systems and the technology pull the data from your applications, correlate the data, identify an actual material violation, and send a work list to the manager to review when something needs their review. And that documentation is completely online. The beauty of this process is that it can run in the background, it can run as often as you need it to run, and if there's nothing to be reviewed or that's deemed material in nature, then the business doesn't really have to deal with that. So you'll push out to the business just what needs to be reviewed and for them to sign off on. And then that is an auditable process for your external auditors to come in and review all of this data online. So you can see if, as you start bringing in other applications, if you don't have automation, it's just going to be more and more difficult to get to a point where you can bring the business in, move to exception-based monitoring. And in fact, you're probably going to be one of those almost 50% of companies that will have a material weakness. Kyle talked about this a little bit, the high audit costs. Studies have found that if you have a material weakness over access risk, or any material weakness in general, actually, your audit cost will go up an average of 30% for the next 7 years, every year. So audit costs are nothing to sneeze at. And so that can help you from an ROI perspective when you're looking at technology to help solve some of these problems. Think about things like that, how important or critical it would be if you don't have an effective process in your audit, in your controls, whether they're process controls, IT general controls, whatever they may be. So anybody that's been on a webinar with me for the last couple of years, I always say, I'm going to show this slide until I retire, because it's just a very good actual use case from a customer of where they could identify users with risky access, and you still want to always do that. But when you can automate the control, you can look at 100% of the activity that's happening in and across your business applications to identify the users that have risky access. And Kyle talked about this. It's not always the highest number of users that has the most, exposure or activity that is coming against your company that could be potentially fraudulent, or it's really just the SOD relevant activity. And also in this particular case, for this one, there were 221 users that had the ability to create purchase orders and process invoices. And if you see this one user, it actually was a user that wasn't even a part of this 221. So automation can also help you kind of fill in some of the gaps that you may have running point-in-time solutions. So we can identify, even if the user had the ability to process purchase orders last week but doesn't have it this week, now they can process invoices this week, and they processed invoices for the same purchase order that they created last week. We can find that, and it would be much better for us to find that and present it to the business than your auditors. In this case, it was $600, probably completely immaterial, but it could have been $6 million or $600,000. That's the thing that you're not going to know unless you start centralizing and automating some of these processes from a control perspective. And the other thing I like about this is that you're also providing value to your business. They may not know. They may know that they have segregation of duties. They may know that they have 5 users or 50 users that have risky access. What they don't know is how much exposure that is causing to the company. And when you're able to identify these things and quantify the risk, this is where you can start bringing a lot of value to your business and, letting them understand more about the transactions that are being processed, identify fraud much quicker than if they have a manual control process or even a sampling process. And all of this goes a long way in just having a much better and complete compliance framework. So I wanted to talk a little bit about how we do this, because I get a lot of questions about that. And typically, I've been helping customers do this for probably about 10 years. And we started off doing really continuous monitoring against SAP, because even without other applications, it's hard enough just within SAP to go get the data you need, correlate it to users, and make sure you can identify actual violations. So what we do is we connect to your target systems. We bring that data into a file structure, and we're bringing data in like invoices that were processed in the prior month, payments that were processed in the prior month, purchase orders that were created or changed, goods receipts that were maybe in a Manhattan warehouse system. All of that is coming into a file structure where we then process rules against those. I always talk about SODs because I do think they're the hardest, but if you think about putting a CCM process in place, we now have a lot of financially relevant data that you can put other process controls around. I have all my invoices. I want to know all of my duplicate invoices. I want to know all my invoices open after 60 days. All of that's there. So that's kind of more putting additional controls on top of the data that we already have. From an SOD perspective, we're making sure the users are the same across both transactions, even if their IDs are not the same. And we're putting additional criteria against that to say, if the user's the same, the vendor number's the same, the purchase order's the same, and the materials are the same, that is an actual SOD violation, and we want to push that out to the business for them to review. And you can see this can just start, we're collecting the data here. You just set up those jobs to run on a periodic basis. Once a month, once a quarter, once a week, we process the data to identify actual exceptions, and those are pushed out for a review. And then all of that data, the exceptions and the review actions, is completely held within the system. So it leaves you zero opportunity to manipulate data, delete records. We're going directly to the systems to get this data. So that's what makes this an effective process or an effective control when your external auditors will come in and start looking at these reports. All right, so just, I know I'm probably talking too fast, but I'm gonna go talk a little bit about this. I think for me, it's important to get the business involved. When you can bring technology into your environment that can help your business make better business decisions, ensure fraudulent activity isn't happening, kind of move to complete exception-based, workflow-driven, make it as simple as possible for your business to own this, the better off you're going to be. No one has extra time. No one has people sitting around looking for things to do. So moving to an exception basis, having it online, letting them action this data online, sending them notifications and reminders via an automated email notification process. All of that makes it simpler for you, internal controls, security, compliance, IT, everybody that has a key place in this process. So keep that in mind, that when you start automating this, you can free up a lot of resources that no one has extra resources for more value added at work. And everybody has a lot of things going on right now, whether it's transformation projects, go lives in different countries, spinning off companies, acquiring companies. You know, there's just a tremendous amount of activities that business people are dealing with these days, and, you know, looking for technology to help ease the burden, have better controls, all of that would be beneficial, and reduce the amount of time fraudulent or inappropriate activities can happen. Because once you start automating this, the more frequent you can perform these controls, the less time you have for fraudulent or inappropriate activity happening against your business applications. And the other thing is, this is just going to continue to get more and more complex. So, you know, my previous example was talking about payments being in SAP, purchasing in Coupa. Probably my goods receipt, my warehouse management was in SAP. Now I'm moving it out to Manhattan. When we used to connect systems to access control, or connect systems to look at SODs across multiple applications, it was 1 or 2 systems 10 years ago. Now when people are coming and having us help connect systems to access control, or when we're positioning Pathlock Cloud, it's more of 20 applications or 30 applications. And part of that is because things like Manhattan warehousing, a pre-so execution, manufacturing execution, those are applications that they have location by location. So there's a separate instance. So think about if you own procure to pay and you have plants and you need to manage inventory and plants across your business process. Not only are you looking at one Manhattan warehouse management system, but if you have 10 plants, you have to go get data out of 10 Manhattan warehouse management systems. So that complexity just more and more will make this process harder, more prone for error, and definitely difficult for your business to take ownership of when you start introducing that level of access governance or complexity. And the last thing I think I'd say here is that when you look for technology to solve some of these problems and provide you things like automated controls and risk quantification, think about how your business could potentially change next year or 5 years from now. Because I guarantee you, it's going to be continually shifting from here on out. The days of having one ERP and everything going into that ERP and trying to manage that ERP, those days are gone. From the smallest company to the largest global environments that we're working with, I mean, the cloud solutions are coming in no matter the size. So as you're looking at technology, be sure to look at things like that as well. What can keep you compliant as your business changes? Okay, I think I'm going to hand off back to Kyle for a little bit of a wrap up or follow on.
There, I found the mute button. So thank you very much, Susan. Some really, really good information there, and very, very pleased that we had the chance to spend with our customers today. So I think at this point, Stephanie, can we check, see if you have any questions that we can answer for our attendees?
Yes, and if you have any questions, add them now into the questions box that you'll find on your control panel. Our first question is, how does the risk quantification system determine what the value of a transaction is?
Do you want me to take that one, Kyle?
Sure.
So the risk quantification, it's we put a lot of time, effort, and thought into how we quantify risk, and it is the amount of the posted payment that is the last activity. So if you think about an invoice or a payment for an invoice, it's the field that is the amount of the payment in that SOD. But for every SOD, the field that we quantify risk from can be different. So it would be a payment, a credit, a rebate. It could be any of those things, but it's always kind of the last final activity in the business process between the 2 or 3 SOD transactions. And I want to say one other thing. We work with a lot of global companies. We normalize or provide our dashboarding or our quantification. We summarize all of that into one currency. You can decide if your currency's euro or dollars, and we can have different currencies based on which users are logging into the system, so they see the quantification in their own currency.
Okay, great. Thank you for that. Our next question is, how do you mitigate a transaction that has thousands of entries and shows up on the report?
Okay, I'll take that one too. So I think that's important, and I actually was going to talk to that on one of my slides, that you know, the goal would be that you run these automated controls and you really get 0 transactions or very few transactions. But the fact of the matter is some of our companies get 200,000 or 300,000 transactions based upon, you know, 300 risk owners and 60 or 70 countries, right? So there could be a lot. One of the things that we work really hard to do is when you do your first initial deployment of the software, it's really important to kind of run those controls first with a smaller group, maybe a business process owner, to see if you're going to get 5 records or 500 records or 5,000 records for a risk for, you know, the prior month. And then look at those very carefully to determine, do every one of those need to be looked at? Because we provide a lot of ability to tweak, include, exclude, include records over a certain dollar amount, exclude records of a certain document type, auto close records that are below a threshold value. So it's really important. And I think typically when we start looking at some of those reports, you try to look for an 80-20. 80% of the records probably don't need to be reviewed and they can be auto closed. And 20% of those are really material risks that need to be looked at. But until you start running these reports and looking at it, it's very hard to kind of get your hands around that. But we provide the ability to really filter in on what's meaningful.
Yeah, I think having the ability to do some more, you know, delegated work across this, our ability to have that fine-grained filtering and be able to parse things out into actual workable chunks definitely makes a difference. Stephanie, any other questions there?
Let me say a couple of other things, because I ran through my slides pretty. I actually wasn't really looking at my notes, which I should. But one of the things I want to say is that you know that if your company is already doing some pretty good mitigation activities, that moving that into an automated process is fairly straightforward. But a lot of you may be looking at, how do I introduce something like this at my company? And I just want to say, you don't have to go 100% on day one. You can take a handful of controls where you might have more prevalence of fraudulent activity, rebates, payments, things like that, and pick a handful to go ahead and start automating. And when you do that, you can start setting up your process, especially if you haven't done it before. How often do I want these controls to run? Once a week, once a month, once a quarter, twice a year? You know, you have that flexibility to set that up. Who will my process owners be? Who's going to get this data? What do they need to do when they look at this data? Who's going to help me filter and put those tweaks in place to say, you know, I can get rid of a large portion of these records that really do not need to be looked at, and just make those be identified, but not workflowed out to be addressed by someone, you know, that's just made noise and you don't want to deal with that. We don't want them dealing with that either. We want them to focus on really value-added activities, including value-added review of reports that are meaningful and material. So I just want to say, you pick 5 or 10 risks to start with, and you kind of get your framework in place. We have a lot of SIs that are really helpful with our customers, to do those things, kind of help you set up what your calendar is going to look like, what your notifications will look like, what you need to do when you review these, what you need to supply, upload, document before you close off these records and complete your mitigation. So there's a lot of help out there to help you get started. We have implementation partners that have things like accelerated implementations that do just that. Pick 5 or 10, they'll help you get the entire process in place. And then when you're ready, you can do the next. It doesn't have to be a, one and done here.
Okay, great. Thank you so much for those comments. Those are all the questions we have for right now, but I do want to encourage you, if you have any more questions, please reach out to us at info@pathlock.com, and we would be happy to answer any of those. I just want to direct your attention also to the chat that I put in the next session. Our next session is defining, identifying, and managing system changes in Oracle Cloud. That will be with Protiviti. And if you want to sign up for that, the link's in the chat, or you can see our entire agenda at the other link that I put in the chat. And with that, I just wanted to thank Kyle and Susan for their presentations, and we hope to see you at future webinars.